Good afternoon, everybody, and once again, thanks for joining us this afternoon for our monthly webinar. The topic today, as you know, is a guide to fringe benefits tax in 2021, and we're really looking at really a brief understanding of FBT and some of the ins and outs, including some of the exemptions that are available in FBT. Then we'll move on to some specific strategies and opportunities that are there for small and medium businesses in particular. And then finally, we'll cap off with an approach to minimising risk in relation to compliance in FBT this year. So, as I said, thanks for joining. My name's Alistair Dent, filling in for Pat Connolly today, who's got some other responsibilities, being the mayor of the local area, and he's been out sandbagging and fulfilling his mayoral duties. So with me today is Phil Davis, and I'm going to kick off with just gaining a very brief understanding of FBT, the FBT regime. So as we can see here on the screen, it's a pretty minor part of government revenue, less than 1% over the past few years, and yet it is an area that the ATO puts a bit of focus into in relation to compliance. And wondered, Phil, whether you could just kick us off with what do we have FBT?
Yeah, that's a very good question, especially with compliance costs so high and revenue where it is. Just by way of example, I remember I had an English gentleman come in to do his tax return, and he handed over his PAYG payment summary, and he's had gross wages of $680,000, which was pretty good. And then I noticed the reportable FBT amount of $280,000. I said to him, "Has your payroll made a mistake here, or what? You know, there's an additional zero." And he said, "Look, I'll explain the situation. Basically, an international company offered me to go across from the UK to Australia to manage a state branch, and they said, look, if you do that, salary of $680, plus we're also going to give you a beachside home, fully furnished and with all expenses paid, and a credit card to cover your school expenses, any shopping, basically all expenses covered." And that is really the reason that FBT exists, because the ATO want to capture those additional benefits that are paid to employees. For his employer, it wasn't much of an issue because he's already in the top tax bracket, and that's why the FBT rate is also 47% to match the top tax bracket. So the ATO basically saying either way, we're going to capture the those benefits.
Yeah, so the point there is it's really to close the loophole, isn't it, of private benefit being provided to an employee in lieu of remuneration.
Yeah, absolutely.
So I wondered, Phil, whether we could just have a look at some of the FBT exemptions that are available for businesses, and kicking off, I guess, firstly with the motor vehicle exemptions.
Motor vehicles with FBT tends to be a fairly complex area, but just there's really two key criteria, and one is that in relation to the vehicle as to whether it's an exempt vehicle, and that is a panel van, a ute, or other commercial vehicle. And the second area, which is often overlooked, is the employee's private use, that is limited to travel between home and work, travel that is in the duties of employment, and also that it's minor, infrequent, and irregular. If we just go into the vehicle side, because that's probably the first aspect, panel vans, they tick that first box as an exempt vehicle. Same with single cab utes. Dual cabs, again, generally most dual cabs would also be exempt, just as a general rule of thumb, I guess. If it's got a total load capacity of greater than 680 kilos, generally that will be fall into that criteria.
So just to cap off on that point, Phil, there is a rule, isn't there, in relation to 1 ton carrying capacity? Could you just tell us the distinction between that 1 ton and the 680 kilos that you're referencing?
Yeah, that 1 ton creates quite a lot of confusion. Basically, it's the ATO's definition of car, which kind of incorporates a number of vehicles up to that 1 ton capacity, whereas they're saying over 1 ton, well, that's not a car. So then it's kind of like a residual fringe benefit or just an other fringe benefit as such. So either way, there's a fringe benefit. So it's just making sure that you can tick the exemption criteria.
So we can still qualify as an exempt vehicle with a dual cab ute with a carrying capacity of less than a ton.
Yes.
So long as the principal purpose of the vehicle is not for carrying passengers, and that's really where that 680 kilos comes into play.
Yeah, the ATO are actually very generous there. I think they're allowing about 68 kilos per person. So it was based on my own weight. Yeah, we wouldn't fare the same, but 68 kilos per person is very reasonable, I think.
Very good.
The last vehicle is rather four-wheel drives, and that's probably where it gets a little bit more complex. Just very generally, if it kind of looks like a work four-wheel drive, it could well be exempt. Whereas if it's a nice one of those nice four-wheel drives that you see families driving around in, it'll probably not qualify. So they're looking at the principal principal purpose again, and also its appearance, promotional materials, specs, all sorts of things the ATO take into account on that. The second criteria is that private use, and the ATO, they like to consider pretty much every vehicle to be 100% private use, unless you can prove otherwise. And with vehicles, it's firstly, some I guess may take the view that, hey, we don't even need to worry about FBT. So the first thing the ATO want to see is, have you actually even considered the FBT applying? The second thing is have a look at make sure they kind of fall into that exemption criteria. And then thirdly, just go to just a little effort of obtaining a declaration from the employee to say that the private use was only that minor, infrequent and irregular. There is specific wording that the ATO have got around that, which, it's a bit more complex.
That's good. So this minor, infrequent and irregular wording carries on, doesn't it, Phil, into the minor benefits exemption, and it's perhaps an exemption that tends to get overlooked, but it's one that can be quite valuable for employers kind of, as well as employees. Can you just give us a bit of a background on what's available in the minor benefits exemption?
Yeah, absolutely. As a number of businesses might buy maybe hampers or something at the end of the year, and they would claim that, and under that $300 you're fine. But there might be other expenses that the employee is paying for out of his own pocket throughout the year, under that $300 bracket, where the employer may actually be happy to help them out on, say, for a new screen at home or something like that. And it's just knowing that minor exemption applies, just make the most of it.
Yep. So the minor is less than $300.
Correct.
And then we move on to the infrequent and irregular. And there was a ruling on that recently, wasn't there, in relation to, for instance, taxi trips. And that might shed some light on what might be considered infrequent and irregular.
Yeah, the infrequent is never kind of, it's not actually defined. That court case said, yep, I think it was around an employer who paid for about 20 trips for an employee's taxi just throughout the year, and I think that went okay in court. So just as a general rule, the more frequent it happens, the more regularly, well, then more likely it won't satisfy the exemption. So a gift card, 5 or 10 or something, per year, you might be right. You start doing 30 or 50 kind of gift cards per year, very unlikely to satisfy that criteria. The irregular, that can be, even though it's a small amount, so home internet, for example, you might be paying $90 a month. But the fact that it happens on a monthly basis straight away rules it out for this minor benefits exemption.
That's good, Phil. So then we turn to work-related exemptions, and some of these things we can see on the screen here in relation to electronic devices and so on. Just give us just a very brief background on what might fall in that criteria.
With the portable electronic devices, yeah. So this is where you're kind of talking about your phones, your laptops. It might be, yeah. The ATO have made it quite broad by changing that definition to just a portable electronic device.
So, and then we've got these other things. We've got software and briefcases and tools of trade.
Yep.
And so once again, if it's got that work-related purpose,
yes.
And then there's a 50% rule, isn't it? So it's generally considered work-related purpose if it's over 50% business use. Is that right?
Absolutely. So the ATO say it's primarily for business, but that doesn't mean it has to be 100%. That 50% is the guide.
Very good. And so then we've got the meal entertainment exemption.
This is around food basically consumed at the employer's premises. So the normal one would be your staff lunches, and we'll touch on that a bit later on under our strategies.
That's good. It's good. So some of the strategies and opportunities that are available under the FBT regime, and there's some new ones out, isn't there, Phil, this year that we'd like to go over. One of them, I guess the first one really being the COVID concessions that have been put forward in relation to vehicle usage.
Yeah, around this, when a vehicle's parked at an employee's home or wherever, it's deemed to be available for use even though the employee's not using it. And so the ATO have issued a fact sheet around this saying that during that COVID lockdown period, so if you take Melbourne, for example, there might have been 120 days where they weren't able to go to work. If that vehicle had only been used, very minimally, so just to basically maintain it, maybe 30, half an hour a week or something. And the ATO has said that for that period, we're going to say that it's not available, for private use. But it is important to know that it only applies to the operating cost, which is the logbook method. So if you've got a logbook for your vehicle, you can certainly make sure you take advantage of that. Because 120 days, I mean, you're almost talking a third of the FBT value for that year. So, yeah.
So it's a great concession to minimise the FBT liability, isn't it?
Yeah, logbooks is probably another area which is underutilised. So you see a lot of salesmen and that are out there, and they are doing a lot of business use. And a logbook is a hassle. I mean, so you have to do it for 12 weeks. But it does last for 5 years, and apps on phones have also made it a lot easier. The big advantage of this is that you can significantly reduce your FBT liability. So even if it was to save you $5,000 a year, and that logbook lasts for 5 years, even though you might change vehicles during that time, you're talking $25,000. And for the 12 weeks completing a logbook, it makes very, very good sense. Maybe just as a rule of thumb, what do you reckon, Alistair? Maybe done some calcs, probably around the 40% mark. Definitely make it kind of worthwhile. Even if we don't use it, the fact that logbook's done means that we can weigh up both options and come out with the best method, which is going to minimise the FBT.
That's good. So as you say, a typical rule of thumb, if business usage is going to be up around, the 40 to 50%, perhaps, or even higher, we definitely recommend doing a logbook.
Yes, absolutely.
So staff lunches you referred to earlier, Phil, and it's something that many employers do as a general matter, of course.
Mm-hmm.
There's some great benefits in relation to HR and employee engagement, and I guess just as a well, like essentially as a fringe benefit,
Yep.
of course. But there's more than that, isn't there? Because if we take up the value of the FBT exemption and obviously the ability to claim a tax deduction, there are some benefits to be had, aren't there? Particularly if we have employees that maybe buying lunch perhaps every day or providing their own. There's some benefits to providing those lunches via the employer. You might say out of pre-tax earnings, rather than the employee providing for that out of after-tax earnings.
Yeah, exactly. So I think most people are aware that you can do staff lunches, and HR reasons they may or may not do it. But probably not all businesses have considered I guess, from an accounting aspect, the potential savings that can be there for them. So you might have had an awesome quarter, and you want to give your employees, a large bonus or something. By all means, still give them a bonus, but you may staff lunches, is another method which you're worth considering. So just take this example we've got in front of us. So cost of lunch, $8 a day, which is saying there's an average over 45 weeks. It costs the employee $1,800 out of his after-tax earnings. So for him to be able to, generally he'd have to have a gross wage then of $2,748. By the time you're talking to your employer on costs, and then take off the employer tax deduction, the employer after-tax cost is at $1,961. On the other hand, if an employer was to then pay for those lunches directly, so $1,800, quite often you'll be able to claim the GST on that amount, and then again you apply the tax deduction. The employer after-tax cost here is only $998, so that's $963. If you've got 10 employees, that's pretty easy maths.
Yeah, and so I guess the question then is we might weigh up, are we better to give employees, let's say, a $3,000 bonus for a period, or perhaps we might look at providing a fringe benefit in this method that may be more valued and more relevant for the employee.
Yeah, exactly, and that's why we've included here. So we're not saying you have to do it, but now that you know about it, you'll definitely view it in a different light moving forward.
So we spoke about portable electronic devices before, and we feel in relation to phones and laptops, electronic equipment. We can see there is some new changes, isn't there, in relation to you might say the second device, or perhaps where there may have previously been a limit of one per employee that might be used up with with the provision of their work laptop. There is new legislation, isn't there, from the 1st of April? Just give us a rundown.
Absolutely. So the big difference, I guess, the change from 1st of April is relating to the definition for FBT purposes. All sorts of definitions the ATO have for small businesses, but for FBT purposes, as of the 1st of April, it's going from $10 million up to $50 million. So that's going to capture a lot of additional employers, and yet well worth being aware of. So in this example we've got in front of us, so an employee might need to purchase a new laptop at home, and he does a fair bit of after-hours work, etc. And you can therefore say that, if you can tick the box to say it's primarily for business use, so that is just 50% or more, he generally might just pay for that $2,500 laptop out of his after-tax earnings. So that's the first example there. By the time he's grossed that up again, and you're coming up with that 2,724 figure, if the employer was happy to pay for that laptop directly, on the other hand, the 2.5, that's coming out of that 1,386. So significantly more tax effective way of doing it. On the other hand, the employer may say, no, I don't want to have anything to do with your laptop at home. That's your business. Yep, I know you're using it for work a bit, but I've already given you one. And the employer might say, look, how about we look at a salary sacrifice arrangement? So in this instance, again, with the salary sacrifice, the employer now agrees to pay for that $2,500 laptop. And you can see there by the time he claims the GST, savings on employer on costs, tax deductions coming out of that 1,210. To make that, on the other hand, with the employee, you can now see the laptop cost for him with the reduced wages as a result of the salary sacrifice. The laptop is now only costing that employee $1,111. So that's a cash saving of $1,389, which is about equivalent to a 56% discount on a $2,500 laptop.
That's good, Phil. So it's perhaps something that that may not have been considered, but it's just, I guess, a creative way of working between employers and employees to maximise the employees' after-tax earnings without impacting the costs to the employer.
Yep.
So moving on to minimising risk, it's perhaps a topic that we don't like to be talking about in relation to compliance and so on. But the latest statistics from the ATO reveal that the net FBT gap is over $1 billion, which basically means that employers are only paying around 80% of the FBT that the ATO has calculated is theoretically payable by them. So it's a pretty big gap. The ATO is looking for some, you might say, looking for some revenue to fill their coffers, been paying a lot of money out in JobKeeper and so on. And it does appear to be a focus area of the ATO in the months and years ahead, doesn't it?
Yeah, absolutely. They're looking for some quick wins. So the first people they'll be targeting is those that haven't known anything about FBT. Just assume that it might not apply to them, but they've got a lot of access now to data on employees and also who owns the vehicles, etc. And it's very easy for them to track down. To trigger an ATO audit, they basically just look as have any deductions been made for a motor vehicle or meal, entertainment expenses, etc. And then the next thing is say, okay, well, if there's been motor vehicle deductions claimed, has an FBT return been lodged? If that hasn't been lodged, have any employee contributions been declared on the tax return? And if those things, those two backup things aren't in place, that's just an order, flag for them straight away that, hey, he's a business that probably hasn't done much about it at all. So the important thing there is to make sure that you've got the so it's, I guess the key thing there is to make sure that you've got the relevant documentation in place. If you get hit with a large bill, you'll certainly wish you had. And it's, in one way, it's quite simple, just addressing it each year. And let us know if there are any utes or whatever, and then we can draft the letters for you. You can obtain the employees' signatures, and that's that documentation now on file, and you'll fare so much better. If the ATO ever come knocking.
So there's another way of addressing some risk at the business level, isn't there, Phil? As you can see, so mitigating that risk of perhaps of having that supporting documentation in place. As an example there on the screen, and some of the documentation perhaps for even some of these minor FBT benefits can be a little bit onerous.
Absolutely.
But we can effectively, you might say, transfer that requirement by doing it in a different way, can't we?
Yeah, absolutely. I mean, the internet's a prime example, especially where the employees haven't been working at home over the COVID period. Employer might think, okay, look, I'll pay for the home internet, but the ATO, I think, are quite unreasonable in their substantiation expectations. So, a 4-week diary and so forth. So just to mitigate, by passing, well, one way of getting away around that, I guess, is by paying the employee an allowance for their home internet. And in paying them that allowance, they include that as assessable income. And then the employee is then responsible for the substantiation. And especially with the home office, rates available to employees, it's quite easy for them to to be able to make that, a genuine deduction in their tax return. But they haven't, at least the employers are protected from their side from the FBT.
So there's another area that's just come up recently in relation to novated leases, which I guess are becoming a little more popular, and perhaps something that doesn't come up from very often, but just a quick flag of what that is, Phil.
Yeah, we just really wanted to alert the guests on the webinar. The ATO just issued new guidance in relation to novated leases. They've changed their approach on it to a degree, and they're saying that where the employee trades in a vehicle or makes cash contributions right at the very start of that novated lease, they're saying that this novated lease is no longer deductible from an income tax perspective for the business, and worse still, that they're saying that as in effect the employer kind of holds the vehicle, that FBT applies on it as well. So all those lease payments could suddenly become all, FBT residual benefits. So that's kind of like the worst outcome. So just flagging that issue. If it's relevant to you, yeah, definitely talk to your tax agent and get it sorted out.
That's good. That's good. So employee contributions. I think many on the webinar today would recall the way things used to be treated in relation to cashing out fringe benefits. Towards the end of the year, there'd be a bonus that would be grossed up for tax purposes, and perhaps a cheque drawn and deposited back, and a bit of a round robin rigmarole. Yes. It's a little simpler now, isn't it, Phil?
Yeah, absolutely. The ATO, said it's all right to do journal entries for a while and given some guidance around that, but they also haven't really given any time frame. So there's kind of been this expectation it has to be done before the 31st of March, etc. Well, the ATO basically provided new guidance around that to say that it's okay for that to happen after 31 March. Ideally, it'd still be done before the FBT due date, which I think is around the 21st of May generally. And it's but they've also just said that there has to be an obligation. The employee has to have an obligation to make a contribution towards the employer for the fringe benefit, and from the employer's side, there has to be an obligation to make a payment to the employee, for example, like for a wage bonus payable or something. And then both the employer and the employee need to agree to offset these obligations. That's if that a journal entry is to be valid. So again, very important to just make sure you've got the paperwork in place and you've got that agreement to demonstrate there's that agreement between the employee and the employer.
That's good. That's good, Phil. So I guess just to cap off quickly in relation to what we've covered today, we briefly went over an understanding, didn't we, of FBT, why it exists, but then in particular, what are some of the exemptions that are available, clearing up some of the myths perhaps around that, around what might be an exempt vehicle and what's not, and the good old 1 tonne scenario. If that's not clear, anybody can reach out for clarification on that. Then some strategies and opportunities, isn't there, including some of those new opportunities that have come up or coming up this year in relation to reducing FBT liability, but also taking advantage of some of the, you might say, some of the concessions and areas to maximise, you might say, the outcome between employers and employees that there are. And then finally, on minimising risk, just pointing up the need really for that documentation, for the process to be done properly. Mm-hmm. So there's a lot of benefit available. There's money to be saved. Yes. At multiple levels in the FBT regime. It frankly is quite a good regime. It's probably the most hated tax, FBT, along with payroll tax. But there is genuine opportunities to come up with good outcomes between the employer and the employee. But there is that need for making sure things are processed correctly. We have the documentation in place, and we're minimising the risk of coming up against any compliance problems.
Yeah, minimising that risk reminds me that another benefit of that small business going from 10 million up to the 50 million is that if we lodge an FBT return for clients, even if it's nil, like even if it results in nil payable, with that small business concession for FBT, the order period is only 2 years. So by lodging that return, that's also another big win for that increase in the small business concession. Yeah. So the objectives of the webinar, we wanted to provide a webinar to obviously provide some of the new ATO guidance, etc., and especially clarify things around the COVID situation. And we hope that by providing a greater understanding of FBT is really the way in which you can take the greatest advantage of the exemptions and the benefits that FBT does provide. So we trust it's all been very beneficial for you all.
That's very good. Phil, we haven't, unfortunately, we just got another obligation after this, so we will have to move on. I appreciate there probably will be some questions from the attendees. There will be an opportunity, obviously, following this webinar. Feel free to submit any questions through to help@qagroup.com.au. We will endeavour to answer those, come back with some detail on any questions that you may have. So once again, thanks for attending a monthly webinar, and we hope to see you again next month. Thank you.
Very good. Thank you.